Gold and silver have served as benchmarks of wealth and security for centuries, holding their ground through wars, economic upheavals, and global crises. These metals are active players in today's financial markets, reflecting the world's economic heartbeat. But with both gold and silver prices showing significant fluctuations, one question looms large. Which metal is the smarter investment in today's volatile market? Elevate your finances with WealthWise Insider, wisdom for wealth builders. Hey everyone, in this episode we'll discuss a pressing question. Which is a more favorable investment currently, gold or silver? Whether you're experienced in the industry or just starting out, there's constant speculation on the better choice between these two metals. Presently, gold is hovering near its peak price of $2,024.70 per ounce, while silver maintains a robust trading value of $25.52 per ounce. Currently, there's a multitude of factors influencing the upward movement of both metals, making it an opportune time to hold onto a stash of metals. Beyond the immediate market dynamics, several broader economic indicators significantly impact the prices of precious metals like gold and silver. For instance, inflation rates directly correlate with metal prices, as investors often turn to these assets as a hedge against currency devaluation. Additionally, changes in the US dollar strength influence metal prices globally, given that these commodities are dollar-denominated. Interest rates also play a crucial role. Lower rates tend to make bonds and savings accounts less attractive, pushing more investors towards metals as an alternative investment. The crucial question arises: where should we allocate our funds next, and which metal presents a better investment prospect at this juncture? Let's delve into the fundamental case for gold. Gold's enduring appeal as a safe haven asset is reinforced by its performance during periods of economic uncertainty. Historically, gold prices have increased during high inflation, geopolitical strife, and declines in the stock market, making it a favored asset among conservative investors. Further detailing at its current market position, gold's demand is also bolstered by its use in various industries, including electronics and jewelry, which consume significant quantities annually. Moreover, central banks globally have been net purchasers of gold, adding to their reserves as a strategy to diversify away from the US dollar, which adds another layer of demand driving its price upwards. Gold is currently nearing its historical peak of $2,074 per ounce. Taking into account the 2023 Gold Britannia 1 ounce, available for purchase at $2,100.59 on appmax.com, with a premium just slightly exceeding 3%. It appears to be a promising investment option. Personally, I find this purchase appealing since it surpasses the previous peak. Moreover, if we consider the inflation-adjusted peak in 1980, gold reached over $2,500 per ounce, indicating potential for further growth. While analysts lack a unanimous consensus on the 2023 price target, factors such as banking crisis, geopolitical tensions, de-dollarization trends, and robust central bank purchases suggest a favorable outlook for gold in the long term. Many analysts anticipate gold to achieve new records within the next 5 years. Nevertheless, silver might present a more attractive opportunity for investors at present. The current spot price for silver sits at approximately half of its previous peak, reaching nearly $50 per ounce. Silver's utility extends beyond mere investment. It is a crucial component in numerous industrial applications that influence its demand and price. It is integral in the production of photovoltaic cells for solar panels, electronics, and medical devices due to its excellent thermal and electrical conductivity. The rise in technological advancements and green energy initiatives has escalated the consumption of silver, thus impacting its market dynamics. Additionally, silver is used extensively in the automotive industry, particularly in electric vehicles, which require silver for electrical connections. This growing sector further emphasizes the metal's long-term value and investment appeal. However, the spread on silver is quite wide, with premiums varying significantly among products. If your interest lies solely in silver as a financial instrument and you disregard collectibility design, then your focus is on acquiring silver with the lowest premium possible, prioritizing weight. In this regard, the 1-ounce silver buffalo round emerges as an excellent choice. It boasts easy liquidity, an appealing design, and minimal premiums. Currently trading at $31.02 on appmax.com. This translates to a premium of approximately $5.50 over spot. Consequently, the premium on generic silver hovers around 20%, with the potential to increase depending on your purchase. Notably, we still have silver buffaloes in stock, courtesy of our partners despite the substantial demand experienced. So if you're in search of silver buffaloes, you're in luck. Silver maintains significant long-term demand from industrial sectors. Recent governmental approval of a bill directing substantial funds toward electric vehicles, solar panels, and associated infrastructure underscores this demand, as these applications heavily rely on silver. However, the availability of silver is somewhat restricted. Only a quarter of silver mines primarily focus on silver extraction. The remaining 3/4 derive silver as a byproduct from gold, copper, lead, and zinc mining activities. It's estimated that around 25% of silver supply originates from gold mines. Consequently, many argue that the supply of silver is highly inelastic and doesn't readily adjust to price fluctuations. Nonetheless, there is a correlation between the rise in silver prices and those in gold. Therefore, through a conservative analysis, approximately half of silver production is deemed fixed, while the other half possesses the potential for modest escalation. It's improbable for lead mines, for instance, to boost production solely for silver extraction. However, silver's reliance on industrial applications, while typically advantageous, can become a vulnerability during economic downturns. Reduced production in such periods leads to a decline in silver consumption for industrial purposes, consequently causing a drop in demand and subsequently in price. As we find ourselves in 2023 amid a banking crisis and the looming possibility of credit crunch, uncertainties abound regarding the impact on our economy. While America has exhibited remarkable resilience thus far, predicting the course of events moving forward remains challenging. Given the current landscape, it's challenging to declare a definitive victor between gold and silver, as both appear poised for prolonged bullish trajectories. Yet each carries distinct risks. Those favoring gold are banking on its potential to surpass previous peak values, buoyed by evolving global trends. Conversely, silver investors aim to reclaim previous highs, driven primarily by industrial applications. However, unforeseen crises or catastrophes could propel either metal or both to unforeseen heights. Your preference between the two hinges on your risk tolerance and comfort level with each approach. As we've delved into the complexities of investing in gold and silver, you've seen how both metals offer unique opportunities and challenges. Now I turn the floor over to you. Which metal do you believe is the better investment for the future and why? Share your thoughts in the comments below. And don't forget to subscribe to WealthWise Insider for more insights like this. Until next time, remember, smart wealth, wise future.